Welcome to Option Trades Today. I'm Tony the Baptiste, and I've got a trade idea for you today. Even though volatility is down almost 5.5% in a post-earnings trade in Meta. But let's take a look at what's going on in the market first. Even the S&Ps are having a banner day, up almost 44 handles. That's 44 points, trading near the top of their range at 41.21 and change. Now, we've been hanging out ever since the end of the month, meaning the end of March, right here around 41 to 42. We're 41.20. We've been in a tight range, and it's not surprising that volatility is in so much today, in by a full point, a 0.17, making it very difficult to find trades with high implied volatility. So if you can't find trades with high implied volatility and you want to sell premium, you've got to look at a trade that's going to have a little less risk to the overall trade. It's the only way that you can do this. Now, let me just prove my point here. I'm going into the liquid option symbols here, and I've clicked on my earnings on top here so I can get rid of all of the earnings because I want to avoid that. And when you look at the IVR and the IVX 5-day change, it's very hard to find a stock that trades with any kind of premium to it, meaning a stock over $5 or $10 or $15 that has any IVR rank. As a matter of fact, the highest one is KRE, which I already have a small position in that's left over. I think I was down about $7 or $8 on it. I think I am now down around $2 on the overall trade. So I'm working it back to even. I'm not going to let KRE get to me. I will look to close that trade when I get even. Gold is a trade that we did last week, working out pretty nice. IVR is still relatively high in this market, as you can see with 33 IVR. It's been up over the last 5 days ever so slightly. So if you don't have a gold position, maybe you like to look at something in GLD if you want to get small in gold. But as you go down here, there's really nothing to look at, nothing compelling here. Wells Fargo, certainly not compelling to me. Citigroup, certainly not compelling to me. Although over the last couple of days, their implied volatility, IVX 5-day change, which when volatility is high, I really like to look at trades that have had IVX 5-day change increasing with high implied volatility or high IVR. I thought about putting on a trade in Schwab today, really looking at it from a pure price point of view, meaning maybe selling some puts in there, but the stock is up at around 80 cents as the market's doing pretty good today. So I didn't want to look at that. So that brings me to what had earnings last night, and that is Meta. Now you're going to look here, and this is the same thing like we looked at BABA the other day. We put on a nice strangle in there that ended up working out for us. You're going to look here, and you're going to see this IV rank at negative number. How can an IV rank be a negative number? I'll explain it to you very quickly. There are no fences around implied IVR rank, meaning that right now Meta's earnings have been as low as Meta's IV rank has been as low as it has been in just about a year or so since they measure IV rank. Now, that's after earnings. It is to be expected. So it's very hard to sell premium in here. But you know what? Meta, one of the best performing stocks of 2023. Look where it started the year. Wrapped around $115. It's now over 100%, trading at just under $240. So I'm going to do a trade here that has a very small amount of delta, but short delta. I think it's a trade that people who don't have a lot of money in their account but want to benefit from possibly a down move or a filling in of this gap if you're a technician, or maybe just some sideways action in Meta, you'll appreciate this. And it uses a small amount of buying power. Let me tell you exactly what I'm going to do. I'm going to go into June with 50 days to go. May options, although people will say that is the front month, it's really not, because we roll our positions with 21 days to expiration, and you'll notice that there's 22 days to expiration in May. So I'm going to go to June, the closest to 45 days with 50 days. I am not going into the June weekly options. Look at the markets here. Look at the amount of volume. I put volume up here, which I rarely show because to me, volume is a good to know. It doesn't mean anything. Open interest is a good to know. It doesn't mean anything for a future price of a stock. It will have a little bit of bearing on how deep the markets are, meaning how wide these markets are. And you can see some of these markets are well over $1 wide at the monies. Even these out of the money options that are trading for $1 or less are still 50, 60 cents wide. So you don't want to take in this product any weekly option risk. You want to go to the monthly options, and you can see here there's a ton of volume in the meta options today. Obviously, after earnings, you would expect it to be very busy. These markets are extremely tight, 10 cents, 3 cents, 2 cents, plenty of things to do. So what am I going to look to do here? Well, I've got kind of a unique trade for you. I'm going to look at selling a $10 wide call spread and a $5 wide put spread. It's going to use a limited amount of buying power. It's going to sell a limited amount of premium because the IV rank is so low. I already sold the 250 calls, bought the 260 calls. You'll notice that spread trading for around 1/3 the width of the spread, 1/3 the width of the spread, $10 wide spread, trading at around $3. Fits our mechanics. We like to collect 1/3 the width of the spread on a standalone trade. Now I'm going to skew it ever so slightly by selling a $5 wide put spread. I'm going to sell the 235, 230. You ask, why do you go so tight? Well, I want to go so tight because I want to collect over the width of the put spread. I was able to sell this at $5.04, just about a penny, 2 or 3 below mid price, depending on where the stock ends up moving. And you can see here, by just being able to sell it a little over $5, this trade has a 70% probability of success. It has about 5 short deltas. It's only using about $500 in buying power. Matter of fact, it's your max risk minus the credit you receive. $10 wide spread, you collect $5.04. That means $496 is your max loss or your buying power effect on this defined risk trade. Let me show you something, or just a nice little hack on when people ask, how much can I make on this spread? Now, it is a spread with 5 deltas. It's a relatively small amount of deltas. They will not grow over time like a strangle would if the stock goes higher or lower or closer to your short strikes. This is a spread that'll stay pretty consistent. As a matter of fact, let's go forward in time real quick. Let's forget about those weekly options because they're not, those markets aren't, those options markets are too wide. Here I am, I'm going to 36 days from 50 days on this trade. So I fast forward by 2 weeks, and if the stock stays right here, you're looking at around $4.55, a very slow moving trade. Let's go a little bit further in time, $4.30. And as you get closer to expiration, obviously, if both legs are still out of the money, this will start to expand to around $1 with a round, which we would expect 22 days to get out of this trade. Now, what happens to this trade if it goes below your put side? Well, you want that to happen. You want the stock to meander ever so slightly and keep continuing lower to around $2.30. I'm sorry, $230. You know that a stock that's inside your short strikes, meaning if the stock is trading around $2.32, this $5 spread will be worth around $2.50. And this out of the money call spread will be worth significantly less than the $3 and change you sold it. Hopefully on a trade like this, you could look to make approximately $1.25 in a slow moving market, which is what we have today. Completely different than a strangle, which you could make $1 in a few days, a week or less. This is a trade that if you're going to put it on, you're going to have to be mildly bullish. I'm sorry, mildly bearish on Meta, because you have no risk to the downside. All your risk is to the upside, and it's capped at right around $500. All right, listen, you don't want to cap your opportunities. See what I did there? So please move, take, transfer your account to Tasty Trade, the best brokerage firm in the universe. Some would say even the galaxy. And that's how we keep the lights on here.